Good afternoon, friends. This is Jagdish Ahuja, your teacher trainer transformer, and today is March 28th, 1:18 p.m. as I'm talking to you. So yes, yesterday the RBI fired a bazooka, literally financial bazooka, into the stock markets and into the economy by putting in almost 3,74,000 crore injection, boosting the sagging economy, boosting the stifled economy, shall I say, right now. And how did it do that? It just did something unbelievable. It took an emergency measure and it reduced the CRR, the cash reserve ratio, by 100 basis points or 1%, from 4% to 3%. And this is something which they have never done from February 2013. So that's almost, if you look back 7 years back, they have resorted to something like this. And this unlocks, because see, CRR is something where the banks have to park a certain percentage of the deposit in cash with the RBI, for which no interest is received. So 1% drop, 4 to 3% is like a 25% drop in cash reserve ratios for them. And this sort of money gets unlocked for banks to lend to you and me and to the economy and to MSMEs and whoever requires it. Plus they start earning on it. So a big booster for banks where it comes to that. Secondly, the RBI reduced the repo rate from 5.15% by 0.75% to 4.4%. This again is historic, literally more than what they did in April 2009. And in April 2009 they reduced it to 4.75%. That was in the backdrop of the Lehman crisis. Now it's 4.4%, the lowest ever. And what is the repo rate? The repo rate is nothing but the rate at which RBI lends to banks. It's the important monetary tool, where in which they are able to control one, credit in the markets, because the higher they keep on increasing, the credit rate, then the banks in turn have to borrow and the banks will charge you the same. So, people, when the interest rate is higher, people don't borrow. When the interest rate is lower, people come to borrow. So they are able to control the credit, they are able to control inflation, because inflation is again related back to money and the money supply. So they are able to control inflation, because more money in the market, more the chance of inflation. Less money in the market, tighter the market, lower the inflation, lower the demand. So they are able to control that, and through these two things they are able to control economic growth. So repo is the biggest ramband, you can say, for any of the central banks, the repurchase of their own securities. So by reducing this, what has the benefit? The benefit is that if you have any loan, home loan, other than credit card, any loan, savings bank, personal loan, with the auto loan with the banks, and if it's linked to repo, especially home loans, then you will get a direct benefit. For example, if you have a 50 lakh loan and at 8.5% for 15 years, your EMI comes down by 0.5%, then your EMI comes down by 1400 rupees. And the overall interest for 15 years works out to 2.60 lakhs, which is what you just save because of the interest rate coming down. So huge savings for people. Again, if you're not linked to floating, you will get maybe a marginal relief of 20 basis point to 50 basis point, but definitely not the 75 basis points. So a huge amount of relief for people who have borrowed. Now the next very big relief, especially when it comes to cash flow, is what it has given in terms of moratorium. So that means all your loans, whatever it is, any type of loan which is due, where the installment is due between 1st March to 31st of May, that can get shifted. That means, in the sense, if you don't want to pay, just inform your banker that I cannot pay the installment, and they will move it forward. They'll move this entire 3 months and they'll extend your credit by another 3 months. But remember one thing, your interest is going to be charged, and the interest will have to be borne by you. So if you can pay the installments, please do pay the installments. You don't have to worry about the CIBIL score or the credit rating score, because the banks have been told not to consider any credit rating changes in this 3 months, because it's not going to be considered at all. So, but the point what tends to happen is that you may shift your credit card, you will still end up giving interest on the same. So how do you avoid that? The way you could avoid that is, if you can pay first, pay it off. If you can't pay your credit card for whatever reason, then the best thing to do is call your banker and get a personal loan. Because the interest on credit cards is very huge, and it will end up you'll end up paying a bomb for it. It's between 36 to 40%. It's not worth it, trust me. So if you have money lying anywhere, first pay off your credit card dues, one. Or secondly, if you don't have that, convert it to a personal loan and ensure that you can get that personal loan, so that that personal loan rate is much cheaper and you will not end up paying so much. So remember that. And one thing I want to clarify is that all your credit card dues do not get paid together. That means, suppose if you're due 10,000 for 3 months, all these 30,000 is not debited at the end in June, but what happens is your installment of 14 gets 14, 15, 16 gets transferred to 17, 18, 19. That means when the 17th installment is due, you pay the 14th. When the 18th is due, you pay the 15th. And when the 19th is due, you pay the 16th. So it just gets postponed by 3 months. You don't come under any such stress whatsoever in terms of finance charges other than the interest charges. No penalties, no other charges are there. So this is a very big relief, especially for the people who are right now under severe financial stress and whose cash flows are affected. Let it be salaried, non-salaried, whoever has been taking credit. This is a testing time, and this is a great relief what the RBI Governor Shaktikanta Das has given yesterday. So our markets didn't, of course, hold on to the gains. We went up to almost 9,000, a great opportunity to sell, because as I've been telling earlier, above 9,450 is when we've broken the long-term monthly trend on the markets. So below 9,450, any rise is just an opportunity to exit. Post 9,450, that's when the market starts breathing again. It comes back to safe territory. Nevertheless, again, 8,550 is another support, the panic bottom which I touched a couple of days ago. That again is the one which you have to respect, and any closing below 8,550, we could possibly go back and test the 7,700s and 7,600s again. So things are not good here, but let's see how things pan out. And this is Jagdish Ahuja once again. Hopefully have a great weekend and stay at home, stay safe. Bye bye. Thank you.